Hi, my name is Karim Raffa.
Hi, my name is Lawrence Lim, and welcome to Why It Matters.
We're here with our guest, Adrian.
Hi, my name is Adrian Love, and I'm happy to be part of Why It Matters.
So Adrian's an IFA here in Singapore, and can you tell us a bit more about yourself, your clients, just general investor interests currently in Singapore?
Yeah, sure. I've been in Singapore for nearly 20 years now, and work as an IFA, which is an independent financial advisor, and we look at helping people here in the region to look after the money.
I mean, coming from the banking and financial industry ourselves, there's a lot of space for disruption in the independent financial advisory space. And with Singapore being such a good ecosystem for disruption and so ripe for it, is there anything that you're seeing right now that could be improved or is being improved?
Our whole industry is ripe for disruption that's here. There are so many changes that are actually going on. A lot of the companies that are here have been around for a long time, and one of the things with that is that it's like trying to move a ship on a pinhead, and it's extremely difficult to do so. So it's taken time, but certainly we are seeing changes come in, and I think primarily the change has been for the better as well.
I mean, in terms of new tech, the thing we're looking at the most is the recurring catchphrase is blockchain, right? I mean, in the IFA space, in the banking space, it's such a huge topic, which has been somewhat battered by cryptocurrency. And I mean, I'm sure that your investors have told you. I mean, just general investor vibe is pretty battered from the bad rep that it's gotten.
Cryptocurrency was very hot at one stage, and you had everybody jumping into the space to make some quick money. That's the general idea. But when you have a taxi driver telling you or giving you blockchain or cryptocurrency tips, that it's time to probably get out of the market. But one of the things that's actually evolved from that is the use of the blockchain technology. Yes. That's very interesting.
No, I agree. And I mean, Lawrence has a lot more insight on the blockchain tech. You're being in the space yourself, clearly.
Yeah, definitely. Yeah, I think for the blockchain technology itself, I'm actually associated with the blockchain project IOST, and is building a technical blockchain platform and protocol. So when we look at blockchain technology, it's not just cryptocurrencies. Cryptocurrencies is really just one part, the investment side of blockchain. But the technology itself can really be used for businesses to achieve productivity and cost savings. And when we look at this, in fact, there's been quite a number of use cases, especially in Singapore, of companies using this technology and seeing really great results and benefits from it.
There's been so much hype around blockchain, it's almost become a thing to help raise capital. I mean, if you're doing anything really from issuing certificates for educational practices to, building film. I mean, Kodak had something to do with blockchain at some point, and their stock rose just because they pretty much printed a news release.
If we look at media and copyright, I mean, blockchain could be a fantastic tool in that industry to actually control output going into the market, and also ownership rights.
So it's also exiting a digital age where we're looking at not only copywriting or protecting or indexing, so to speak, digital assets, but also it transpires into the physical. So if you were to, for example, want to track a work of art or a point of origin of any commodity, say coffee beans, for example, you could technically tag them on the blockchain and track them through their entire logistical process, right?
Exactly like what you say, especially in art, there's a lot of, I would call it, unseen money being moved around. So all these pieces actually require AML and KYC procedures. So for an art dealer, it's especially important for them to track all this from end to end and have an audit trail to show that they are not involved in any wrongdoing or money laundering activities that resulted in these art pieces being sold. So it's actually a defensive mechanism and a mechanism for them to prove to regulators that they are actually in the claim.
But rather than being defensive or hiding, if you have nothing to hide and you're not trying to be shady per se, then the blockchain will also be a huge cost saving for government agencies such as the SEC or the Internal Revenue, just because everything is so clear and immutable, right?
Absolutely. When you have nothing to hide, then I think that's the best situation. I think perhaps certain parts of the industry might benefit from such transparency. I guess with regards to that, tax havens and how tax is being done for high net worth individuals and stuff. Perhaps Adrian, will you have any views on that?
I think I would love it if we actually managed to protect our own identity. via blockchain. So today we give an awful lot of information to third parties that are involved in our day-to-day life, and to have a system whereby that is not retained, but it will do the job, as in protection, consumer protection, KYC, all these issues. They'll prove who I am, where I am, what I'm doing, etc. But then you don't have a third party actually using your data for other aspects, unless of course you get paid for that, and that's a different game.
That's where Europe's been coming in with the GDPR, and we've got similar systems being adapted in Singapore. It's been around for a while with the opt-in method, and the US is adapting very similar Data Protection Act. But to get back,
very clunky though.
It is very clunky because the underlying tech isn't there, right? But if all of a sudden the underlying tech in Europe was to change to, say, a blockchain-based infrastructure, for the end user, it wouldn't really change that much, right?
Yeah, I think usually if all technology, I think the interesting part is always that the conceptual framework can always be built, and then implementation, getting people to change behaviors, that's when it takes a little bit more time to get things adopted. So yeah, definitely, blockchain is still in its early days. We have conceptualized the technology, we have figured out where it can help. Now it's really getting people to adopt it, start using it, and realizing that perhaps it is a much better way of doing things than the old ways.
When all of a sudden you have data protection acts coming in like GDPR and huge implementation changes, technically it's going to change the end user's behavior anyway, right? So wouldn't now actually be the perfect time to shift the underlying tech and have everyone, rather than just getting used to ticking the boxes 5 times for the GDPR and opting into the third party data, wouldn't right now actually the time be perfect for that change? I mean, do you think in your case investors would be ready, or end users would be ready?
I think complexity kills, right? So we need to get this as simple as possible, so it's easy for the end user to actually use this and where they actually feel comfortable. And I think once we get to that stage, then it's going to make a huge impact to what we actually do. As you say, we're at the early stage of this, Lawrence, and we need to see where we go from here.
Technology should be transparent. Like, you should never see it happening to the consumer. Like, it just suddenly become part of your life so seamlessly that you don't even realize it's there, and then it makes an improvement to it without you knowing it. And then suddenly you're so reliant on it, you can't let go of it. So I think that's the interesting part about great technology, and I think that's how great tech companies have been formed. I think, as Adrian rightly pointed out, we are still in the very early stage of that. It's still, blockchain itself is still very complex, and some time will be needed to take things from until that point where it becomes great technology.
I think people have got away from, or starting to get away from, the greed element of the blockchain and the crypto, and they're starting to look at it with a more business orientated structure. And we have terms like early adopters, and it certainly applied to here. So we've had the press release, shall we say, and now we're getting down to the nuts and bolts of how we can actually implement this in a structured way into our economy, which is what we're trying to do at the end of the day.
Well, I think the recent market downturn has resulted in a lot of the people who originally wanted to make a quick buck in the industry from actually avoiding the industry. So
we have to remember, right? I mean, the reason why things were slow, why IPO filings are slow, and the due diligence is so high, and the aim was to protect the end user.
Exactly.
Isn't necessarily as versed in what a risky investment is, what an ICO is, and with that in mind, okay, a lot of people got burned, especially in 2017. But it has resulted in a more clean ecosystem now, where people have started carrying out their own due diligence. People have started being more smart about it, and it's led to an ecosystem that is ready for that change. Exactly, to embrace the change, right?
The ICO, people are wary of that at the moment because they're trying to get a value on exactly what the ICO is, and I think that's where the problem lies. How do you put a value on an ICO?
Last year used to be 2 guys on a white paper, used to be the common saying. So just 2 guys with a great idea, and they have just pretty much printed it out onto a piece of paper. No business registration, no real track record, nothing more, and they suddenly raise a few million in a few seconds because, well, people were eager for that quick buck, like you said. But now that they've been burnt, I mean, Lawrence, what's your insight on what's going on now? What's changed in 2018?
Investors are definitely a lot more cautious, both retail investors and the institutional investors. It used to be that you can raise millions of dollars with just a white paper, just a concept. And that's really stunning in itself, because it just suddenly democratized and changed the world of fundraising. And then these days after people got burned, now they start to demand more of the founders who come up and you say, where's your customer base? Are you able to come up with an MVP, show it to us? We'd love to have different milestones to see
the questions that you should ask before investing in a business, right?
Yeah, exactly. Yeah. It's the same questions that you ask investing in any traditional brick-and-mortar business or any tech business. And I think it was the euphoria last year that really allowed people to raise money that way. But to say that it's going to continue forever, I think that's probably not sustainable.
It's a cyclical process. I mean, Adrian, you've been around in the investment world for a while. I mean, it happened after the crash in the US in 2007-8. People started investing in China heavily, investing into the bicycle production company was a great one where they misreported earnings, people kind of believed into it, invested into it, and suddenly, they just disappeared and nothing happened. And now it's the same thing with blockchain tech, and people got burnt again, and we're doing it again. It's good to see the investor appetite is back, because it was gone for a while, right?
All history is different, but it repeats.
It does. There is that cycle. I mean, it's good to see investor appetite is back, and it does it gives way for innovation, and it does give way for just general participation, right? From end user participation all the way through to training developers and for people.
I think all things is like a double-edged sword, where it democratized a lot of fundraising and create a very new fundraising business model. At the same time, it brought in a lot of people who saw the opportunity to do something less ethical. And it comes together like this.
It's immature markets, right?
Yeah. So as the market matures, hopefully the bad side would go away. With some regulations and stuff, and the good side stays. And I think it's a good thing because innovation and business is much needed. And having the capital to support these innovations to grow, and having easier access to such capital, I think is a great thing.
It is. I mean, we were in a market where it was very hard to break out as an early stage company, as a startup, mostly because the market was so dominated by bigger companies, and anything you could possibly do to file your own, the IPO process, the due diligence process was very costly on one hand, very time consuming on the other, and it almost created, say, a barrier for early stage companies. And now we're in an ecosystem where solutions have been built for early stage companies, for individuals and so on, to automate, move away from the controlled environment that was set in place, admittedly to protect people.
Yes.
But with the risk came also now opportunity. It's a rife time to be a spectator, an investor, and a futurist in every possible way.
I think any time that you have something new that comes onto the market, you're always going to get the yin and the yang. So, but when the dust settles, you see where the true value actually lies, but that's really when the hard work starts.
What do you think is the appetite for crypto investments, at current stage in today's markets?
Last year was hot. There were a lot of questions. A lot of people wanted to get into the market. They didn't understand the process of how you got into the market and how you got out, how you held it in cash, and how you got a fiat currency into a cryptocurrency and reversed it back out. So we had those issues. But this year, a lot of people are hesitant of looking at the market, and they're looking a lot more careful.
Yeah.
A lot more carefully, should I say, at the market here. It's not high on the agenda for investors as such, but IPOs, ICOs, people are still looking in there, but they're still looking for the idea. That's what they really want. They want the idea, and people still have hunger. They still have the want to spot the next greatest thing. Yeah, exactly. It's there, and I think business models have actually changed. And I think a lot of business these days are looking to build something with a view to get bought out. Because the large companies can't pivot. It's impossible for them to do so. So they're looking at different avenues where they can add value to the customers.
I mean, the tech is there, the environment's ready, and it's a great time.
There's a lot of new entrepreneurs that are looking at the market in a very different way, and that's great because we always need fresh blood to come into the market with new ideas that'll change and steer the future, especially for us that are not 25 anymore, should we say.
It's changes happening a lot faster than it used to as well, where adaptation took a longer time. Now, on one hand, the investors, the end users are a lot more willing, on the other hand, yeah, the industry is a lot more adaptable than it used to be. Well, I think that's it for today.
Yeah.
Thank you, Adrian, for coming with us here.
It's been my pleasure. Thank you, Karim.
My pleasure, my pleasure.
Thank you, Adrian.
Lawrence, thank you very much. It's been a pleasure.
And thank you all for watching.